Hello everyone, welcome back to Edwards Trades. I'm here again to give you guys another market update on the SPYs, the QQQs, as well as the core list of companies, giving you guys my thought process of who's winning, who's losing, where we're sitting at in the overall stock market, in the tech sector. So of course, as I do start off with every video, we're going to take a look at SPY, the SP 500. We're looking at the weekly time frame, and as you guys can see, as I zoom out, again, we're still going in an overall downward trend line. And as far as candle structure and location, we are sitting again. As far as structure goes, we're kind of had like this indecision doji candle. Of course, depend as you can judge the body size from the prior candle. There were a little bit of choppiness and sideways. We did have a high here, which are obvious rejection. From 378, sellers were able to bring it back down all the way to the lows, which is this week that just happened, of the 14th, to 349 levels. From a weekly perspective, of course, we're still kind of sitting sideways. We haven't really been doing much of a whole lot of movement, mainly because of CPI data and as well as unemployment data, that came out this past Thursday and Friday, which I'm going to explain a little bit more into that detail. So going on to the daily time frame, as you guys can see here, this was during you have two bars here, right? We had a bullish engulfing candle, which took place around Thursday's trading session, which was CPI data. And now, however, as you guys can see here, this is the reason why this is a bullish engulfing candle, is because this candle's structure and size is obviously bigger than the last candles that were prior. As we moved into Thursday, the CPI data, or the inflation number data, came out, and what it revealed was that the numbers revealed is that inflation is still, of course, persistent. The numbers were high. I think the numbers were higher, but I think it was like 1% higher than the last inflation report from last month. So with that being said, during this Thursday's trading session, which was when the report came out at 8:30 in the morning, the market was managed, or we gapped down. If we go to the 4-hour time frame, so I can elaborate a little bit, it was kind of an interesting day. I mentioned it in my Instagram about exactly what took place. So if we wanted to go ahead and take a look at exactly this overall structure, SPY actually dropped. This was pre-market, right? 9:30, when the CPI numbers were revealed that it was 1% higher. The market gapped all the way down up to the lowest low that is like currently the lower low, which was 348, right? The lowest beyond summer lows. The market actually, or you can say the buyers, managed to step up in tremendously with I'm going to go ahead and try to put in some volume here. The buyers were actually able, as you can see here, there was roughly 87 million active buyers during this time period after the CPI data was released, and managed to force the market its way up all the way to the prior high, or close to the prior high of the previous candle, which is roughly 361. This was a significant move. I think it was roughly about, it tells $16 move. Everything in the market in the tech sector went green for the day. And of course, you know what caused this capitulation, or this accelerated movement, was the fact that there was a lot of new money shorts, or people that had puts. I was the unfortunate person who had puts in this region, got squeezed out of their position, and managed to gap over the 366 mark, which was a prior high of I think it was Wednesday's trading session, right? Of course, the numbers doesn't significantly mean that the market's getting better, but this overall reaction means that new money shorts got squeezed out of this position. Whoever had puts here obviously got squeezed out of their position significantly in this trading session, right? Roughly 90. Close to 100 million active buyers in this region. And now moving on to Friday's trading session, right? The market kind of dropped back down, and now we're sitting at the halfway region here, which is roughly 356, which was where the market's currently closed at, right? So I know that's a lot of digesting, and that's a lot to take in, right? But what does that mean as far as the market overall outlook? So again, in the daily perspective, CPI data is still not good. Because of that reason, the Fed interest rates are probably going to more than likely put a 0.75 base interest rate hike. Unemployment came out Friday, which was this Friday. I don't exactly know what numbers came out Friday for the employment data, but I think it was improved significantly better by, I think, roughly 75,000 new jobs were created, something like that. But again, the overall market reaction is that we had this big push Thursday after CPI data, which is still not good. Squeezed a lot of new money shorts. Friday came along, and now we're just sitting at the halfway region, which is roughly around 356. Now, if I go ahead and show you guys my drawings and trend lines, again, what really happened, right? What's really going on here? I'm going to go ahead and extend this line here. This is a lot to take in, so this is going to be a really in-depth video. So clearly we're still respecting this overall downward trend line that I've drawn right here, higher highs, higher lows. Clearly this region here was really the last push before the market can continue to fall over. And this is the all-time summer low. If we go to the weekly time frame, again, 348 is significantly getting close to the all-time or pre-COVID lows or pre-sickness lows of 324 for the SPY. And of course, buyers were able to step up and push the market up from the 348 region here, and now we're sitting again back down to these levels here, as back down to the halfway mark, making and possibly forming a new lower low. Now, what does this all mean? Obviously, that means that the Fed needs to be more restrictive. The market could be heading to pre-sickness lows, which is obviously not a good indication. We're still in a bearish territory, bear market. And again, this false move upward just to come right back down shows that buyers or sellers are extremely in control of the market. Anytime the market sees any form of green or any form of bullish movement, market again, or the sellers really are just take advantage, take control. We rejected this 370 region, which was Friday, and then we didn't fill the gap here above 370, which would leave, if we're able to go above 370, right, and hold above 370 and continue to make our way upward, then I can say that the market, it has a bullish reversal. But this was clearly a bear trap in the Thursday's CPI data trading session, as well as a bull trap leading to Friday's trading session, right? So again, what does this mean in the near future? What this means is that I still believe, of course, that we're in a bear market. We're not out of the woods yet. We could be heading to new lower lows of 341 if we break the low of Thursday's trading session, which was 348, which is where we're probably going to head right back down. Anybody who went long here on calls are obviously getting a little nervous and seeing whether or not the market can hold itself above summer lows, which is right around this region here of 362. But since we closed down this region here, obviously bears are still in control. Still a lot of selling pressure taking place. Inflation is not under control. And again, if we go to the weekly perspective, we're still right around, below 346. If we come a little bit more back down, below 346 is pre-sickness lows, which is around 324. And of course, if we're still seeing lower lows and lower highs taking place. So again, the trend is still all bearish, extremely so. So again, my overall outlook for this week is again bearishness. If we want to see levels to play out, obviously we need to hold above 370 in order for it to be bullish. If we can't hold above 370 or even come above 362, I expect the market to come back lower, and the new lower low potentially below 348 would be, from again the weekly perspective, the new lower low would have to be, let's see here, 346 would be the next lower low. After 346, it would be the pre-sickness lows of 324. I know that was a lot to take in, but I really want to go in depth in this video today because a lot has happened this week. There was a lot of sideways activity throughout the whole week. And of course, as the market, continued to reject 362 SPY mainly, buyers stepped up this bullish engulfing candle, and now we had almost somewhat of a bearish engulfing candle here. But again, sellers weren't able to bring the market all the way down to beyond 348 levels. So again, excuse me, from a 4-hour perspective, we're kind of sitting roughly in this region here. There was a lot of congestion and sideways in this region, but again, we're waiting to see if the market could hold itself above, or can hold itself above 362, 370. But right now it seems like the market's heading lower. And again, the next lower level I'm seeing is 346, right? So now we're going to go on to the QQQ. Excuse me. So again, the daily perspective here is that, again, higher highs, higher lows, just like SPY, rinse, repeat. We're still seeing a lot of rejection. Again, during Friday's trading session, the market had a bullish engulfing candle after CPI data Thursday. Market pushed itself up, gapped up Friday morning. After that gap up, the market rejected summer lows, QQQ of 272, right? rejection or support here prior here. Now it's turning to rejection, support, support, support. Now it's rejection. And again, halfway through this bullish engulfing candle, sellers are completely in control. And if we go to the weekly perspective again, levels to look out for, since we did close below 263, which was prior support here, now let's turn into resistance. If the market has a dead cat bounce, rejects this 262 region here again, we're possibly seeing more lows. And what's really important about the QQQ as well as the SPY is that if you take a look at the next support level, which I've drawn out here, which is 230 for QQQ mainly, there is not a lot of structure here, right? This literally is just like no support besides here and these regions. It's literally just like I'm gonna go ahead and get a drawing here so you guys can see here. It literally is just like, you know, filler right here. There's literally like nothing. Hang on. There's literally like nothing, no structure. It's just straight momentum upward. And that is typically what the sellers are aiming for if we want to continue this selling pressure to take place. Why? Because that would drive the market lower. And obviously anybody who wants to buy shorts or new puts or new you know, betting the market's going to go down, they want to see a lot of gains coming off from these low, or coming off from the QQQs dropping well beyond this region here, which would be 229. So I haven't experienced enough where the market can head towards this potential region. But as far as the structure, which what I'm looking at here, I would not be surprised if we continue to head lower. And as the market heads lower, we're going to end up hitting again precipitous lows here from 2020. And again, structurally speaking, this is a far drop. I mean, like if we cracked under, the fact that we closed under these lows is quite concerning. Bulls will really need to reclaim roughly above 260. I would say here, let's go to the daily. I would say bulls really need to reclaim this 272 mark and, form a higher high. And again, this kind of bullish engulfing candle was kind of like the last resort, if you would take it so like that, in the sense where it's kind of the bulls' last line of defense to push the market up. But again, since bears are so in control of the market, they just pushed everything right back down. Again, anybody who had calls here are clearly in the red or going to be in the red, whatever Monday's trading session will be, right? So we are heading towards, really deep, red markets. We could be seeing lower lows take place. Now, what is a little concerning in both halves of the situation, from what I'm seeing, is that although I am saying that the market is still bearish and we're heading for lower lows, the market is technically oversold, which means that the market is significantly, the price points or the prices are really low. Low enough to where it would seem unreasonable for buyers to step in right around this time. So, of course, even though I keep mentioning this bullish engulfing candle, this shows that the presence of buyers are still there. They're just waiting for the right opportunity to step in and finally reverse the market all around, right? Because again, if we take a look at Thursday's trading session as far as volume goes, you can see at prior volumes before, this selling pressure taking place, is downward momentum. It wasn't as high as it was Thursday. We have 112 million buyers taking place, active, traders. And now, not even close to where Friday, where we had this, rejection of 272, drop back down halfway. There was little, like almost not even close to the volume as the Thursday's trading session was compared to Friday's trading session, which is where we had this drop. Now, I know it's a lot to take in, but I'm really trying to emphasize the importance of exactly what is going on in the market, because again, it's kind of iffy to where, we wouldn't want to see, which I'll go over in the core list companies. We don't typically see markets dropping this low. A lot of people talk about a recession that could be taking place, maybe the start of next year or leading on to the end of the year. That's quite possible. I'm not too sure. As far as I'm not really too sure about a recession taking place, but the market is heading significantly lower than it did prior, and because of that reason, again, bullish case, bearish case scenario, obviously the bears are winning by a lot. If we see more strength from buyers, being able to push the market up, again, we must go hold over 272 for QQQ and continue making higher highs and higher lows. if we were able to go above, I'd say 280, I would say the market is pretty on its way around having a bullish reversal. But again, from structurally speaking, sellers are still in control. There's still a lot of sellers taking place, a lot of shorts taking place. And, this whole move Thursday kind of, again, signified buyers are there, but we're waiting for buyers to step in fully to turn around the market and cause this trend to reverse from a bear market to a bull market, right? So I know there's a lot to take in, but now we're going to take a look at the VIX. Now the VIX is important because I think I only talked about the VIX one time, which is a market volatility in the overall stock market. So what that basically means, right? The VIX basically measures market fear in the stock market, right? Fear obviously drives people to buy or sell prices, buy or sell in the stock market, right? So typically we use the volatility index to measure the overall fear in the market, whether it's high fear, low fear is what I'm going to get into right now. So if we want to take a look at the fear market volatility, as you can see here, the overall term or phrase that people say is that when the market is low, or when the VIX is low, it's time to go, and when the VIX is high, it's time to buy, right? So what that basically means is that when the VIX, anytime the VIX moves upward, the market typically sells off. When the VIX typically is heading down, the market goes up, right? Which is why what I just said holds true, because again, this was roughly I don't know why they have 13th. The 13th, right? The VIX rejected the 34 level here. Since this rejection, right? On Thursday, since the VIX dropped, the market went up, and then Friday, of course, the VIX managed to come back up, and now when the market, or Friday, VIX went up, VIX is green, market is red. Thursday, VIX is red, market is green. Right? That's basically what I was trying to say earlier, but yes. So what does that mean? Obviously, there's still a lot of fear in the market, which is why, again, the market is kind of like trying to decide there's a lot of fear in the market, right? We clearly are rejecting this 34 region here, which is the highs during summer lows here. Again, summer lows, this was a high. During the beginning of the year, you can roughly say we've been rejecting 34 here for quite a while, right? So I don't know exactly if we're going to be heading back, but for the most part, it's every time we reject the 34 region, right, market heads lower. And because of that reason, we typically don't want to see the VIX go higher than the 34 region. Why? Because if the VIX goes higher, then the market goes lower. So again, or actually, excuse me, I ignore what I was saying. If we break the 34 mark, right, there's typically a lot of fear in the market. So if the VIX goes and breaks above 34, we could be seeing more selling pressure taking place in the market. That's what I was trying to say. Excuse me. My head's all over the place, right? So yeah, above 34, expect more selling pressure to take place. But again, we haven't had really a major breakthrough of the 34 region, right? We've been rejecting ever so. This was summer lows. So, if the market's able to, the volatility in the market, if the fear turns down, and the Feds is able to control inflation, control interest rates, the worry of recession diminishes, then we can potentially see a market, reversal turnaround. But again, I would watch for the 34 level if we continue to break it. Of course, again, the bigger picture, or what I just said earlier, is that when the VIX is high, it's time to buy, and when I didn't mean to draw that. When the VIX is low, it's time to go. So again, if we break the 34 marker, expect more selling pressure to take place across the overall stock market, the board really. And again, if we continue to reject the 34 marker, it could signify, of course, that buyers are stepping in, and there's not that much fear taking place in the market to obviously cause a lot of people to sell their positions and force the market to go lower. But structurally speaking, right, again, we don't want the 34 region to break here, because again, that would cause more selling pressure in the market. And again, what this is showing me is that there's not enough momentum to drive the market lower enough to where the buyers or the sellers are really gonna, cause this fear and this, recession to where we, let's go to the weekly perspective where we break above this levels because we have been, rejecting it for quite some time now. So really, it just depends what the market wants to do. But nonetheless, I know I've been rambling a lot, but I really want to go in depth in this video, right, to tell you guys exactly what I think of what's going to happen in the market. But again, we've still been rejecting this 34 region here, so it could signify again that buyers are still around or waiting for the right entry to reverse the bearish market, or number two, where sellers are just waiting for the fear to kick in, because I do believe we have an FOMC meeting this week. I'm not too sure, I'll double check. Whatever they say could signify a breakthrough of 34, but we're just right now holding above 30 here. So it really just depends what the news brings out this week. If there is an FOMC meeting taking place this week, whatever the Feds decide to do as far as interest rates will determine the overall direction of the market. I know I've been saying that continuously in my videos, but it's really important for you guys to understand what's going on for the economy as well as the global markets. So if you've been enjoying this video so far, please hit the like, subscribe. You already know the deal. I know this video is super long and I'm really trying to go in depth today because, I feel like I need to go more in depth to explain to you guys exactly what's going on. And, it's a lot of stuff is happening, so much news, especially what happened this prior week. And I just really want to keep you guys up to date. And this video is going to be excruciating long, but it's for your guys' own benefit. I'm here to teach you guys what I know and what I think. And, it would really support me that you guys like the video. And if you guys are still tuning in, of course, continuing watching, especially as I go into the core list of companies now that, I really appreciate that you guys are really enjoying, and I keep saying it, but it really helps out. It takes a while for me to make these videos, write down my notes, jot down what I see, what I think. So I really appreciate you guys are sticking around and watching the full video because, I'm doing it for you guys and I'm also doing it for myself. I'm learning with you. But yeah, enough of that. Just make sure you guys like the video. Now, let's take a look at the core list of companies, right? The moment we've all been waiting for, right? So what does that mean for Apple and so on and so forth? So levels for Apple's, again, much like SPY and the Kikuku, bullish engulfing candle here during Thursday's CPI data. Right, we managed to, again, bulls were able to hold above the 134 region, the low. The low here was roughly, here was 133, which is during the end of June. Again, market did gap down already. We opened Thursday morning around the low here, 134. Market buyers stepped in, pushed up, bullish engulfing, rejected this overall trend line again. Now we're sitting at the halfway mark here. Depending on how the market opens up, two things that I'm looking out for. If we open still in the red, if we open, right, again, we're still respecting this downward trend line drawn out here, the white line. Because we still are rejecting this trend line, I'm looking for two scenarios. If the market wants to be bullish or signal at least that buyers are stepping in, we must break this downward trend line here that I've drawn out. Not only that, but we must hold above the 142 region and form a higher high roughly at 146 and hold above 146, right? That would signal at least that the market is turning around and buyers are stepping in. The bearish case scenario, which again is what we're obviously been experiencing for quite a while now, that if we continue to see more selling pressure, I'm expecting maybe a little bit of a dead cat bounce, quite possibly a dead cat bounce if we go to the 4-hour time frame for Apple. I'm probably signifying either two scenarios here. We get some sort of dead cat bounce, reject 140, 141 region and continue to move lower, or depending on how or not just that, but if we can't hold support above 136, 137, we come rejected, turn this into resistance. Again, expect the market to come back to the lower low of 133, which is what took place during Thursday before the magnificent gap up or push rally that we had during that day. But yeah, if we hold above 136 and the market it moves up, breaks 142 and holds above 142, I expect the market to be somewhat bullish. But for now, again, bearish side would be that we continue to fall, see more selling pressure take place, come to 137, break below 137, reject, and continue to see lower, so on and so forth. So that's Apple. Again, weekly perspective, we're heading towards lows of roughly right around here. 124 will be the next region. If we break 133, 130-ish, we break those levels, we're going to see the next low of 124. But again, we're still waiting to see what exactly the market wants to do. But that is a level for Apple. Now we're going to take a look at Tesla. So Tesla, as you can see here, Tesla kind of broke major support level of 210. And since we broke 210, now where the market is kind of continuing to sell off. Next level I'll be looking out for will be roughly the 190 region here. I think they closed at 204, so 190 will be your next support level, which I'm going to go ahead and draw out here. Right around this region here. Yep, right around here. Right around this region is what we're looking for here. Again, obviously significant selling pressure taking place, and because of that region, we're seeing we closed under the 210 support level here, and since we closed below it, I'm expecting possibly maybe a little bit of a bullish dead cat bounce to reject 210, enter new shorts, new puts to evidently head to the 190 region. A bullish turnaround, or the bullish case scenario would be that we hold above, the market comes back up, holds above 210, makes a higher high here, roughly above the prior candle, which would be 227, maybe 230 here, which would signal a bullish reversal for the time being. But those are the levels to look out for. Again, we close at 204. We're waiting for a rejection of 210 to buy new puts, new shorts to head to 190. Bullish case scenario, we have a green day, market rallies or Tesla rallies, holds above 210, make a higher high above these two candles here, which is roughly 230 to 27. And yeah, those are the levels for Tesla. Now we're going to take a look at Microsoft. So Microsoft again, it's kind of sitting in this choppy zone here where there's not a whole lot of movement, but again, bullish engulfing candle. From a weekly perspective here, we held above. Let's see here. We kind of held above the lower low of last year. Let's say last December, beginning of this year, which was roughly 220, right? So the market again tried to gap up or push its way up. Buyers try to step in. Of course, we rejected the 236 level, and now we're heading back down. Again, halfway point will be 226, so we'll see whether or not Microsoft can hold those levels here. But those are the major levels to look out for. Again, rinse, repeat. We're just waiting for the overall market to, of course, signify a higher high situation here, where, again, we make a high above the previous candles here and see if the market can hold above it. To fix that trend line later. But yeah, again, the next lower low would possibly be if we continue to see more selling pressure, 219 all the way down to maybe roughly here 206 will be the next level here. Let me go ahead and draw it out. 206 would be the next level to look out for. We're seeing more selling momentum. After 206, the next level we'll be looking out for would be here 194, 200-ish. And then, of course, that would be pre-sickness low here, which the next level would be 180. So we'll see how the market pulls through, but those are the levels I'm looking out for Microsoft. We're going to take a look at Facebook. I know it's a lot of long video, but, oh, not Facebook, Meta. Excuse me. I keep forgetting that they changed their name. Okay, so Meta. Ignore this trend line I drew out here, even though it's pitch perfect, right? We have some sort of descending wedge here, which I'm not going to really to elaborate. We had it like a descending triangle here, descending wedge. I believe that's what it's called. But anyway, levels to look out for Facebook. Obviously, we're seeing massive selling pressure taking place. I believe this is like the lowest low that we've seen for quite a while here. Okay, 123 is where we're holding up. So let me go ahead and draw this trend line here. Right here. Right, and this was again, wow, this is 2018 lows. We're going to have to zoom out a little bit. Monthly perspective here. So we're kind of sitting on thin ice here with Facebook. We're sitting at, extreme lows of 2018. The next lowest level would possibly be, if my estimate would be, let's go ahead and see if I can zoom out a little more here, would be right around here at 113 level here. I think 113. Maybe, yeah. I'd say 110, 113 region here for now. Yeah. 110 would be roughly the region here. If not, I mean, it could go as low from 72 from here on out. Not a lot of good structure here. So in all, if Tesla or Facebook, or excuse me, if Meta wants to remain bullish, we have to, of course, come back to this resistance level here, which is going to be here of 144. Needs to obviously see a significant break above 144, hold above 144, then climb its way back up to 157. But of course, the next lowest level, if we reject 122, it would be 110, is what I'm seeing at for Facebook. Now we're going to take a look at Nvidia and then AMD. So I know if you guys have been keeping up with the news for the chip companies, have been seeing a lot of selling pressure taking place as far as what's it called? I think it was PC sale numbers are going down. Chips aren't being as profitable this year, and because of that reason, they're seeing a lot of selling pressure taking place across the chip company. Intel, AMD, Nvidia, all these chip companies are seeing significant revenue declines because of the tension with China. PC sale numbers are going down, so of course they're seeing a lot of selling pressure taking place, which is obviously driving the numbers lower for these chip companies. But again, sticking on to the numbers here. So from what we have here, again, we are just sitting at pretty much not all-time lows, but lower low here. I mean, really, as far as structure, I mean, the next support level for AMD would be $80 if it continues to see selling pressure. The reason why I'm throwing such a harsh number out there is because, again, structurally speaking, there's not a lot of, from 2020 to here, it's pretty much been like just overall straight upward. Really, there's not a lot of structure or support in these regions here, and because of that, I mean, it could be at that $80 region here, right here. $80 flat would be for Nvidia. If the market continues to see some selling pressure, it would be $80 maybe. Yeah, pretty much $80 I would say would be the next level for AMD or Nvidia, currently speaking here. So again, levels to look out for, we need to break above 122, hold above 122, or hold above 124, fill this gap, and continue to push our way higher. If not, again, I would say $80 will be the next region if the market continues to sell or see more selling pressure. And let me go ahead and fix this because this is a little bit incorrect. Right now, we're sitting roughly around, or actually, yeah, we have to hold above, not only break this overall trend line I've drawn on here, this downward trend line, right? Let me go ahead and draw this out a little more here. Perfect. Again, we need a break and hold above 116. Bulls need to hold above 116. If we can hold above that, the next level will be 126. After that will be 140. If we reject 116, expect the market to head lower. We break 100, we're possibly going to see 80, so on and so forth. But those are the levels to look out for. Again, significant selling pressure and bad news across the chip companies. But those are the levels I got for Nvidia. So now we're going to look onto the last company, which is AMD. Alrighty, so the last company to look over, but again, levels to look out for here would be, again, let me go ahead and draw here. Okay, let's not worry about that too much. Again, significant selling pressure across some chip companies as well. We're still seeing significant lower lows taking place. Structurally speaking, because it's dropped significantly, chips across the board. As far as levels go, I don't really have an accurate estimate because I've never seen it go this low. But of course, this, structurally speaking, after we closed below 74, we basically dropped all the way to the lows of 50. Let me see here, 50. I can't see what this number is. I can't see what this number is. Hold up. $58, right? So the market needs to hold above $58 here. If we can hold above 58, obviously the buyers need to significantly climb its way all the way back up to $66.68. But again, what really would cause this bullish reversal if we hold above 75, $74 here, this white line here. But again, a lot of selling pressure taking place. If we reject $58, the next level I'm looking at here would possibly be 50 flat. $50 flat. I'm going to go ahead and mark that here. $50 here would be the next level I'll be looking out for. After $50 here, I can expect to see more. Let's see, maybe I could say the next level would be $36, $35. But from structurally speaking, if we break below 38, expect to see, more nastiness along the way. So that's basically the overall tech sector broad market analysis. And just a close point on my overall prediction of the overall market. Again, it's kind of rough to say that the market could be heading lower, although depending on how the market reacts this week, if buyers are willing to step up and reverse and kind of drive the bears out of the market, we're seeing more volume, more buying pressure take place. We break this overall downward trend line from SPY, make higher highs and higher lows. We really need to see a reversal in the overall market to really signify that the buyers are stepping in and they're trying their best to reverse the market. But again, every time the buyers try to step in, even from a candle structure, buyers push the market up, we manage to come back down. We have a green day, we instantly get a red. Green, red, red. We have more red days than green days. So I'm not really trying to say that, the market is heading for all-time recession, all-time lows. But it just seems like to me that, from a structural perspective, it's just a lot of selling pressure taking place and the market really hasn't found its bottom yet. But this could be, however, this could be a market bottom. So for example, if this week, let's say the market continues to sell off more and we manage to bounce right back up again, this could be an indication of a market bottom. If this was a market bottom, and let's say for example bears can't drive the market lower than 348 and it keeps getting pushed back up, then this would signify a market bottom. And what that basically means, that a market bottom is basically where bears or buyers finally said, okay, that's enough. This is our time to step in. This is our time to shine. This is the lowest we'll allow the market to go, or the lowest buyers are willing to allow the market to go. We push the market back up and we continue to move on upward. Hoopla, hooplay. Everybody can enjoy their profits and, start making money again and buy more shares, so on and so forth. So, although my prediction analysis is very bullish, or excuse me, very bearish, I am very skeptical from this move that buyers are just waiting for the right opportunity to finally squeeze the shorts or the bears out of there and continue or try to reverse the market. Although we did have inflation data come out negatively, it just they're not going to maybe, just maybe, there is slight hope that maybe the buyers are waiting for the right opportunity to just scare the bears out of the market and squeeze the shorts and continue to rally up and finally reverse the market. But that move must happen sooner or later, because again, if the market continues to sell off, we're just forming new lower lows. And again, the biggest worry is we're going to see pre-COVID lows, which is roughly during the 2020 pre-sickness lows. Not here, obviously. Maybe we could head lower here if we break the support level of 325 here in this region. But we're heading roughly close to that region, and because of that, we got to see whether or not buyers are going to step in. So that's my overall market analysis for this week. I hope you guys enjoyed this video. I know it was a lot to take in. I really went in depth, but I hope whoever is watching continue to watch this video even till now. Please like the video, subscribe, leave a comment down below. If you guys have any questions, let me know. But that's my overall analysis this week. I hope to see what the outcome is for this week. I'll post another video, of course, at the end of every week of my overall analysis. But I hope to see you guys in the next video. So peace. Have a good trading week, and let's see what happens. So peace out, guys.